Good morning. Happy Monday. Hope everybody had a great weekend. Welcome to Stock Market Today. This is Dan Russo, the Chief Market Strategist at Chaikin Analytics, coming to you on November 23rd, 2020. Holiday shortened week ahead of the Thanksgiving holiday here in the United States. We're going to dig into macro trends as we always do on Mondays. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today to sign up for a free email. U.S. equities mostly lower and fairly uneventful Friday trading. Dow, S&P log declines for the week after 2 weeks of gains. Most sectors were lower, tech and industrials trailing. Utilities, materials, and healthcare were your best performers. Treasuries were bid with the curve flattening. The dollar was stronger against the euro and the yen. Gold finished up 60 basis points. WTI crude up 1.2%, closing at its highest level since the beginning of September. Again, at the sector level, your outperformers. Utilities only grouped to finish higher. Materials and healthcare also outperformed. Tech, industrials, and the fins underperformed. Now, as we get to the desk this morning, futures are bid as Monday appears to be the day for vaccine announcements. Vaccine optimism again here on a Monday morning as AstraZeneca presented some data as it relates to their vaccine candidate. So S&P futures are up 60 basis points after that mixed performance last week. Pro-cyclical trade, or that rotation trade, largely continues to be the biggest topic in the market for equity investors right now. Asian markets were higher overnight. South Korea up nearly 2%, China up over 1%. Japan was closed for a holiday. Now, so for those of you who've been following my work closely, I've been talking about Asia for a while. And I think that it's outperforming the U.S. There are facts and there are opinions, and simple fact of the matter is the U.S. is being outperformed by markets in Asia. So for investors who are looking to take a little bit more of a robust approach, I think you need to be paying attention there. European markets are higher after rallying last week. Treasuries are weaker with the curve steepening and a continuation of another trend. Dollar weaker on the major crosses. Gold down 40 bips. WTI crude up 1.5% after a 5% pop last week. And as we dig into the structure of the market here, no change to the structure of the market's trend, right? We're trying to break top side through a consolidation within the context of an uptrend for SPY, right? That's how I kind of see it. Support at 340, 320 below that. In my opinion, as long as we're above 320, the structure of the uptrend off the March lows is intact. You want to use oversold conditions to become more aggressive on the long side of the portfolio. Now, everybody's different, right? That's a framework that I use. Our overbought, oversold indicator. You see it on our charts. I like to see oversold within the context of an uptrend or oversold above support, right? I mean, some people are more aggressive. They don't care if the market's overbought. They just go get them if the trend is up, and that's fine too. You have to know yourself. We speak to a broad audience, right? So it's hard to hit everybody's idiosyncratic strategies. For me personally, I like to get more aggressive when we're oversold within the context of an uptrend, but that's what fits for me. Qs 260 key support, 280 staying above that keeps the September highs in play. But quite frankly, kind of interesting in our work, IWM bumped up to a very bullish rating in our model this week, while the Qs bumped down to neutral. Now, remember, IWM bumped up to bullish and the SPY bumped down to neutral months ago, about a month and a half ago, 2 months ago. So the Chaikin Power Gauge rating for ETFs got you in front of this rotation, which is pretty fascinating. All three funds are overbought by our work now in the near term. Let's take a look at our market in a minute. Holiday week trading could bring some volatility. Volumes are light, so any kind of news, good news, bad news, could bump markets one way or the other. Q rating downgrades to neutral, touched on that. IWM up to very bullish. That's in our ETF model, which is, quite frankly, as I just said, been in front of the rotation. If you've been paying attention to what we've been saying, we've been all over it. Commodities pushed to the top of the range as the dollar probes the bottom. That's not surprising. Treasuries remain under pressure in fixed income. I like corporates better. Vaccine news bids futures higher again on a Monday. Let's take a look at what's happening from a power bar perspective. Dow down 75 basis points, 4-4 bulls to bears there. S&P 500 down 70 basis points, 123 to 59 bulls to bears on that front. Still solidly positive, right? NASDAQ's the one that's seeing the deterioration now, 15 to 14 bulls to bears after losing a like amount. Small caps actually up on the day Friday, higher by 9 basis points. It's green, right? It's a bigly outperformance. 819 to 194 bulls to bears on that group. Bonds uptick, sending yields lower. According to the Chaikin Power Bar, small cap stocks and large cap stocks are strongly bullish. Major indexes are mixed. It's our stock of the day now. First, solar looks compelling to me. Solar gets a lot of attention. Everybody talking about TAN. We saw a lot of big runs within the space, names like Sunrun, CSIQ, et cetera. But First Solar here has been consolidating, and I like the setup, and I know the money flow is punk, but everything else looks okay here. So the weight of the evidence, in my opinion, points to First Solar. Let's chat about it. Bullish ETF rating. Strong trend, strong industry group, stocks trading above a rising long-term trend line. Did trigger one of our buy alert signals, the relative strength breakout, right? You know we love relative strength. I tend to pay attention to these closely. We're seeing a little bit. Notice, after being a steady outperformer, we saw some bouts of weakness, right? Not massive weakness, but, some flagging or fading relative strength. And now we're starting to reassert. All right, so consolidation, solid support at $80 for the pure technical crowd out there. All right, we're above the $80 support level, so you want to shoot against that. Overbought, oversold indicator moving higher within the context of an oversold position, right? So again, similar to markets, we are oversold and above support. I like the setup. Money flow could be better, but it's the only knock. So the weight of the evidence looks compelling to me for a name like First Solar. Take a look at it if you're looking for bullish ideas. If you have room in the portfolio and it fits within the framework of your existing portfolio, I think it makes a ton of sense to be looking at a name like First Solar. Let's take a look at the sector tracker now, move into the major sectors over the last 5 days of trading. Energy, industrials, materials, financials, folks. If that doesn't scream cyclical rotation, I don't know what does. Now, you've heard me talk about materials. You've heard me talk about industrials. More recently, we've been talking about banks and the fins. Next shoe to drop likely when it makes sense is going to be energy. You can just see it. You can see the rotation. It's been playing out since June, July. This is not new. That's what's interesting. That's what's fascinating to me, is the world is just waking up to it. But it's not new. It's not flip a switch. It's pay attention to the structural underpinnings of the market and catch these things as they're playing out. Comms, tech, REITs, middle of the road, all down. Staples, healthcare, Utes, down more. Our industry in focus, healthcare services, past 6 months, been a laggard, underperforming by about 6%. Power bar, which looks at future potential, shifting bullish here, 9 to 7 bulls to bears. It's currently ranked number 15 of 21 subsectors. Has moved up one slot over the past week. Names like TDS, USM, and Adtran, ADTN, all with very bullish, and bullish ratings, respectively. All holdings in a fund that, to be perfectly fair, you can see just kind of looking at this chart, how it's herky-jerky. It's all over the place. Probably not a ton of liquidity here. Let's get that out of the way first. But if we're going to use it as a framework and a reference point, we can still do our analysis. 9 to 7 bulls to bears. Strong trend above the trend line, knocking on the door of a 52-week high. But not an outperformer, although what I will say is the relative strength is improving. It's not there yet, but you can see a steady increase in the relative strength. So we got a neutral, laggard, overbought, bearish money flow. I mean, a lot of moving parts here. Clearly a mixed bag at best. 9 names to look at if you wanted to dig in and do some work here. It's not all that compelling to me. That's just my stance. I'd rather spend my time doing work somewhere else. Let's hit what's trending now. We're going to go through these fairly quickly because honestly, there's not a ton of company-specific news. We're kind of through the bulk of earnings season. Now we're getting into the holidays, right? It's a holiday shortened week this week. And, and then we're going to get into the year-end kind of festivities as it relates to markets and holidays. So not a ton on the company-specific front. CF, nothing doing, up 4%. Etsy, a little bit of a rebound, up 4%. Microchip traded a 52-week high. Semi's been strong. We've been talking about the semi theme for the past few weeks. You should be reading my Friday note where we look at themes, where we talk about semis outperforming. Take two. Nothing company specific on Friday. Got a positive mention in Barron's over the weekend. Twitter. Didn't see anything company specific here either. I did note that not on Friday, but early midweek, Elliott Management updated their holdings and had some calls on Twitter. But I didn't see anything company specific drive Twitter higher on Friday. Loser side of the board, Norwegian, no news. Las Vegas Sands had some. Well, you know what? LVS was down on the report of airport traffic. October's airport traffic through Vegas coming in lower. Carnival is pausing some cruises again, down 4.5%. Dexcom, nothing company specific. Intuit down 3.8% on the heels of their earnings announcement. Let's dig in now. Macro trends and themes. We don't talk about this one enough, and I have a feeling you're going to start hearing about it a lot. We touch on it from time to time. Full disclosure, I am long Bitcoin. I'm a long-term Bitcoin bull. Don't see anything to change that. I don't trade it, but I realize there are people who do. So let's look. I mean, this is a consolidation within the context of an uptrend. It's a almost 3-year consolidation. Within the context of an uptrend that's on the verge of breaking out. You're going to read about it. You're going to hear about it. The Bitcoin maximalists are going to go absolutely crazy when we break to new all-time highs. I'm not emotional about it. I'm bullish. I get the thesis. I get the story. I pay attention to it. I buy it. I buy it on regular intervals. To me, though, let's frame it up. We're above. This is a weekly chart. So the blue is the 40-week. The red is the 10-week. Right, we're above both, on the verge of a breakout. Solid support around 13.8 to 14,000. We are overbought here, weekly overbought in the near term, but there's momentum here. So I think that if you break above these 2017, 2018 highs, you're going to see people go bananas. Keep your head. Don't be emotional. Right? Treat it like anything else. If you've done the work, as I have, and you like it as a long-term trade. And I mean, I'm dollar cost averaging into it. That's how I'm playing it, with obviously some buffers, right? And I'll manage a core position, but as we have a breakout at 14,000, and we're on the verge of new highs at 20,000. So I just wanted to point that out, because if we go this week, it's going to be on the radar screen. So I want it on your screen. What's interesting is a lot of people view gold and Bitcoin as inflation hedges, and there are people who love gold. There are people who love Bitcoin. I think, you should be paying attention to both, but it's kind of interesting that Bitcoin's on the verge of a breakout as gold continues to consolidate here. Now, this is gold, the commodity. I'm paying attention to the 1800 mark on gold. That's the one that looks interesting to me. We're below the 50-day, but above the 200-day. Solid support around 1800, lines up with the rising 200-day moving average. If that gives way, then you will have completed a kind of a descending triangle, and you have to obviously think about risk management. At the same time, I think you want to pay attention to what the dollar is doing. Bottom of the chart is the U.S. dollar. I think that if the dollar breaks 92, the dollar index here breaks 92, you'll see gold go higher along with the rest of the commodity complex, right? So then it just becomes a relative thing, right? Why would you own gold if other commodities are outperforming if within that space and for that theme, right? Same concept as when you're looking at equity markets, but just kind of interesting that Bitcoin is the one that's running here. It's got a lot of the gold people tweaked. I say don't be a Bitcoin person, don't be a gold person, be an investor. Skirt to the relative strength. Right now is Bitcoin. Finally, let's look at corporates. Corporate bonds leading in fixed income, right? Again, long-term followers of my work know I've been cooling and have cooled to Treasuries. But I think just given what's going on and the message of the market, corporates look good. LQD on the verge of a new high, momentum shifting, and look at LQD beating ag. So if you're structuring your portfolio, based on asset classes, LQD is outperforming within the fixed income space. So that's going to wrap us up on a Monday. Have a great day, everyone. Take us for a test drive. I'll be back with you tomorrow.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.